It's a Friday afternoon, and you try to pay for your order at Taco Bell. Your debit card gets declined, but you have money in the bank. You check your app, it won't load. Then a message pops up. Due to technical difficulties, our website is unavailable until Monday. We're working hard to fix this, and your funds may not be available until then. You look on Facebook, it's the only thing anyone can talk about. This is how a global financial crash could actually look. It's not a riot or a huge geopolitical event. It's just that the plumbing in the financial system quit flowing. This almost happened in 2008, and it would have if the government had not stepped in and had a massive intervention. It may seem like the government stepped in and saved the day. However, all they did was put a band-aid on a financial system that is even more precarious today. So you wake up Monday morning and you look at your account and your money is still there. However, a notice pops up and says in 30 days, your paper money will no longer be valid and you have to take it to the bank to exchange it for digital currency. What you just experienced is a currency bait and switch. This is how they could roll out a central bank digital currency, also known as a CBDC, without even you realizing it. Let me know if you think this is a scenario they would use to roll out a CBDC. Economics isn't boring. The manipulation that occurs right out in the open makes mafia activity look like a bake sale. In 1944, the Bretton Woods Conference was held in New Hampshire. The US dollar was designated as world's reserve currency, backed by the gold in Fort Knox. The world agreed to use the dollar system because the federal government promised the ability to redeem your dollars for gold at a rate of $35 per ounce. By 1971, it was becoming apparent that the federal government was printing a lot more money than they had gold to back up. Starting with the French, governments started to demand their gold in exchange for the dollars that they were holding. To prevent the crash, Richard Nixon temporarily closed the gold window, meaning that the US dollar could no longer be redeemed for gold. Many of you know this story, but what isn't understood is this fundamentally changed what the US dollar is. The US dollar after Nixon closed the gold window is not the same dollar that existed the day before. Before closing that window, that dollar was a claim on gold in Fort Knox. After that, the dollar became a promissory note, backed by the full faith of the US government. No one is entirely sure what this means, but I think it's something along the lines of the US government telling you, hold my beer, we got this. Let me know what full faith and credit of the US government means to you. Whenever the money system breaks, they always blame the same villain. In 1971, Nixon closed the gold window, making the US dollar no longer redeemable in gold. He justified this under the idea that speculators were manipulating the price of the dollar and he was trying to protect us. We're from the government. We're here to help. The dollar was losing value, and someone had to be the scapegoat. The government is never to blame for a crisis. Not war spending or unlimited money printing. It's just greedy traders. There's plenty of manipulation in the private sector, but the government never wants to accept blame for their part in it. With the US federal debt now over $38 billion, who would you like to blame? I can't be out of money. I still have checks. This might sound humorous to us, but it's the policy of the federal government. Owning a money printer does have its advantages. We now spend more on interest of the deficit than we do on military. That's not a budget. That's a death spiral. This was totally manageable when interest rates were near zero. However, the Federal Reserve increased interest rates to try to combat inflation. Much of the US debt is in short-term T-bills that are sold to the public sector. These must be renewed on a regular basis, which means they must be sold at current interest rate. It might seem like complete mismanagement that all this money wasn't rolled into 30-year treasury bonds when interest rates were low. However, these short-term T-bills are needed to make the financial system function. This requires selling new T-bills on a regular basis, which can make the federal government extremely susceptible to spiraling out of control interest rates. There are only three ways to fix this: austerity, living below your means; default, where the government refuses to pay its debt; or deflation, devaluing the currency so the debt becomes less of a burden. What solution do you think they'll take? We all know Social Security is underfunded, but it's okay. You have a 401k. Or at least that's what you think. Is it really your money when the government can tell you what you can do with it? For now, the government can still raise money by selling treasury bonds and T-bills. However, other countries are becoming less interested in purchasing US government debt. What happens when Uncle Sam runs out of buyers? There's nothing stopping the federal government from changing the terms of your 401k plan to require you to invest part of it into treasury bonds. This would require you to start selling some of your stock portfolio and handing the money over to the government. They will make the case that the market is too volatile and they're looking out for your best interest because they want your retirement to be in something nice and stable. With almost $10 trillion in 401k funds, this can be a very inviting honeypot for the federal government to dip into. Even better, all the selling would crash the stock market, making the government look like the savior. Do you see this as a viable scenario for a strapped cash government? Try withdrawing $10,000 in cash. I'll wait. You just triggered the need for the bank to file a CTR form, also known as a currency transaction report. This is a form that a financial institution must file with the federal government anytime you withdraw $10,000 or more in a given day. These have to be filed by banks, credit unions, casinos, or other industries that handle large amounts of cash. The federal government claims that this is to prevent crimes such as money laundering. However, this means you're a suspected criminal. The teller asks, why do you need the money? None of your business should be the correct answer. I prefer to just tell them I'm starting a cult and I need some seed money. However, do this and you'll trigger an SAR, also known as a suspicious activity report. These are triggered anytime you withdraw $5,000 or more and look suspicious. I don't know about you, but I can look a little shady. I could be using my cash to buy things like food or building supplies or, God forbid, gold. Let me know if you can sleep better at night knowing that Big Brother is protecting you from yourself. Imagine money that expires. Fabio Panetta from the Executive Board of the European Central Bank described the benefits of a central bank digital currency, or CBDC. He pointed out the benefits that the currency is programmable and could expire or only be allowed to use for certain things. Do a search on Google or ChatGPT and it'll do its best to backpedal, as Fabio did after he got the backlash from this comment. CBDCs aren't crypto. While they use some of the same technology as crypto and they exist on a blockchain, they are completely different because they are controlled by the entity that's distributing it. Right now, a bank can freeze your account, but this opens a legal battle. However, with a CBDC, the federal government can just issue it to you directly. And since they issued it, they could just turn it off and you won't have any recourse. There are a lot of hurdles in the United States to implement this because of constitutional rights. However, in countries like China, this is already the norm. Do you think we're going to follow in China's footsteps? That money in your account? Not yours. After the banks failed in 2008 and the government bailed them out, the US public was not exactly excited about their tax dollars going to too big to fail and too big to jail banks. Knowing this, our benevolent government jumped into gear and replaced a bad idea with one that's even worse. In 2010, Barack Obama signed into law the Dodd-Frank Wall Street Reform and Consumer Protection Act. As we know, an act usually does pretty much exactly the opposite of what it's named. You can guess what type of good little tidbits are in this one. Don't worry, it eliminates the need of the government to have to bail out banks. Next time they crash, they just bail in instead. What's a bail-in, you ask? A bail-in just means they can take the money they need from their depositors, which is you, instead of the government. But don't worry, you will get compensated. Instead of your cash, they're going to give you stock for the recently bankrupted bank. Don't think this can happen? Just ask Cyprus. They did it in 2013, taking up to 50% of depositors' money. Let me know if you think Congress should shove this act and exactly where they should shove it. The goal isn't panic, it's options. What makes you sleep better at night? Having a bunch of Nvidia stock? Or knowing that you'll be okay if it all crashes? Having a strong financial portfolio is not a bad thing. In the world of number go up, it can be pretty addicting to watch your balance increase. However, I personally would feel more comfortable knowing that my entire livelihood is not based upon something that I can't control. If that money is burning a hole in your pocket, ask yourself, do you have physical assets? Do you have food, equipment, ammunition? How about gold and silver? Are you sitting on a pile of silver coins that you can use in case our monetary system crashes? Do you self-custody your precious metals and your cryptocurrency? Or are you relying on crypto exchanges and a vault on the other side of the planet to store your shiny stuff? How do you know your metal hasn't been sold to 10 other people? So you don't have the money to buy all this stuff. Great! Most of us don't. If everything goes down, you're going to be in a much better position if you know how to grow food and fix an old tractor than having a large portfolio full of Apple stock. Even a pile of gold is not going to replace basic skills. What have you done to prepare for the unknown? We know the federal debt is sky high, but do we ever take the time to really look at those numbers? The debt is currently $38 trillion. That's roughly $112,000 for every American citizen. Just had a baby? How's that make you feel knowing that he came into the world with over $100,000 of debt to his name? The US is adding over $1 trillion of debt every 100 days. That's $10 billion per day. That comes out to $29 for every US citizen. A number like 38 trillion might be pretty hard to understand, but if you have to pay someone $29 every single day just to exist, that's pretty easy to grasp. So you say it doesn't affect you. You're not paying anyone $29 a day. Okay, that's fair. Your net worth is just decreasing by $29 every day because of this inflation. Now, how's that make you feel? Kind of like treading water? So long as they keep the numbers big enough and confusing enough, people don't ask questions. Inflation is a hidden tax that the government places on all of us. If they raised our taxes by $29 a day, we would revolt. The only way the government can get out from underneath its huge debt pile is to inflate it away. Inflation has to run hotter than the interest on the treasury bonds that they sell. When interest rates were low, this was manageable. However, even the modest interest rate increases we have seen in the last few years has turned this into a runaway freight train. What are you doing to protect yourself? Why does the government tax us? Can't they just print their own money? Is this a trick question? I guess it depends who's being tricked. The government already has to print $1 trillion a year just to cover the interest on the national debt. Add in government overspending, and we're printing over $1 trillion every 100 days. So yes, they could print the money and just leave you alone. This would probably cause the national debt to go up quicker. However, you'd get to keep more money, which would stimulate the economy. It's hard to say if this would be a benefit or drain on the overall standard of living. What would the government really be giving up if they quit collecting taxes? Control. When you file taxes, you provide a massive amount of information to the government. You tell them who you donated money to with your write-offs. They get to know about your business expenses and your medical bills. They get to know about your political affiliations and how many children you have and what their ages are. You are voluntarily giving them your life story in exchange for reduced taxes. So what do you think? Am I nuts? Or does this sound about right?